Do you play the LinkedIn games, Queens, Zip?
I haven't tried them yet. Well, App Snack next week, next time.
Okay.
LinkedIn games.
Done.
Like
Oh, dude, I'm like on a 180-day streak on Zip and Queens. Like, those two are my jam. But no one can beat me on Zip. Oh, man, I'm good.
Oh, so
Yeah.
Gauntlet's been thrown down. I'm going to zip it up.
Dude, bring it on. Bring it on.
Also, Ian, do not take that out of context when I say I'm going to zip it up. That was not cool.
Run with it, Ian.
I'm going to
Zip it up. Zip it up.
It ain't easy. In fact, it's hard. It's downright tough growing a firm from a solopreneur to a massive team. I often get asked by people, Tyler, who mentored you? And you know what? It shows, because no one did. I made tons of mistakes on the way learning how to grow my firm from just me to the $1 million firm it is today. And so, when people ask Tyler, do you mentor or coach? I say no one should be subjected to that much of me. But what we did do is bottle up every best practice, tool, resource, template, and walkthrough that we could and package it all into what we're calling the Firm Foundation. Head over to thefirm.foundation to get access to our library of resources, tools, templates, and instructions on how you can scale your firm faster and get all the tools and resources you need to make your team successful and ultimately get yourself out of the business. Head on over as we're releasing out how to do bookkeeping workflows, tax workflows, metrics, fractional CFO, and more. So get on over, Firm Foundation, sign up for our next release, and we can't wait to see you there. Thanks. Welcome to UnAccountable, the world's okayest accounting game show podcast for product news, education, and updates. I am your foggy fellow of a host, Tyler Otto, and I'm joined by the groggy guy, Jeremy Van Grohl, just surviving January.
Right? And so we're dropping this on the 29th, so it's the 21st right now. It is a slog, right?
Yes.
Getting through January, doing all the things, and it's dark every moment of every day, and it's negative 20 degrees here in Wisconsin. I woke up this morning. Man, this is a rough month, man.
I don't know. This is like one of my better years. January's going surprisingly well. Either I'm missing something or we're doing great.
I agree. Like, I haven't had to deal with a lot of the fires, which is a win by itself. But I know they've been there and, you know, some things I've heard behind the scenes. So I agree with you. Like, mine, I just don't know as a firm that we're doing a ton better, but a little bit, I think. I think we're, making subtle improvements.
I think the hardest thing for me right now, like you and I have talked about, I've got this like partnership sub company we did, right? The partnership with the software where they're white labeling our services. And I underestimated how much work it is to train a sales staff that has never sold accounting services on how to sell accounting services. Never mind that we didn't publicly post prices. And so the first people that reached out to that sales team were basically inundated with tire kickers that wanted $100 a month bookkeeping. And so they're defeated right now because every client just like blows them off and like, are you kidding me? And it's like, wow, I did a really bad job of helping roll this out. So that's been my learnings for the month. If you guys ever do a partnership and white label, make sure you filter out the tire kickers early.
Oh yeah. And and that's just good thought too, that if you have to train a third party on the value of selling your services, like you actually have to train them, right? Like give them talking points and be like, here's a script, or, you know, here are the objections that you're going to hear. Here's what you're going to respond to that. Yeah, that's going to be a lot. Because if they don't know what we do, they're going to be like, yeah, they're going to put numbers into places and you're going to get a report. It's going to be awesome.
Honestly, I did a really good job, I thought, of training them. But then it's just like, there's so many things you don't think of, right? It's like, you know, the pricing pushback, some of it, like I was like, yeah, here's how you compare to QuickBooks. But they were on, like, sometimes a 4-room hotel is never going to be able to afford our services, right? If they're making $300,000 a year, they're not going to pay for good accounting services. And trying to teach that sales staff that, nope, there are going to be some clients you can't sign. Just scare them off right away, move on. Yeah, like I didn't set them up well for that.
Lessons learned.
Lessons learned. Jeremy, I want to hit into news real quick, and we've got plenty to talk about this week. But have you seen the recent updates to the post office and the postmarking system?
No, I even saw this on our list of things you were going to talk about. And I'm like, wait, what is this now? And I intentionally did not look at it. So
Oh.
teach me, teach me, teach me.
Is that just because like you didn't want to have to read, or like you wanted
yeah.
to actually learn today?
If you could just do all the things for me, that'd be fantastic.
Okay.
All
So I posted an article out there. We can include it in the show notes. But essentially, the post office in the USPS, in their effort to reduce costs, is no longer going to postmark the date an item is received. Instead, they will be postmarking on the date it's processed. This is going to allow them to cut down processing centers and have everything aggregate to less and less centers. And instead of having to worry of batching everything by what date did it go into a box and then having to do it, they're just going to postmark whatever day they work on it, which might be 2 or 3 days later. Jeremy, guess which federal revenue collection agency doesn't care about the USPS changing their guidelines on postmark date? They just say things have to be postmarked. I'm going to let you guess what 3-letter agency didn't care.
So it's got to be the IRS, right? So
Yep.
what I'm hearing is, and a huge prize this would be, is that 2 federal agencies do not care what the other one is doing and going to just do whatever the hell they want. Perfect.
So what this means is essentially if you like, cool, I've got to get these 1099s in the mail on January 31st, which by the way, listeners, you have 2 days to get these done.
Yeah.
If you're like, I'm going to go drop them in a mailbox and get them postmarked today. No, it's whatever sometimes someone gets to it. Now, there are some workarounds, and USPS lists on their website. There are things you can do. First off, you can request a manual postmark. You got to go into a post office. You have to sit in that line and request the person at the counter put a manual postmark from the moment they receive it, and then you can guarantee it's that day, which that line is going to suck.
Yeah, why don't you just hit me on the head with a tack hammer, Tommy? Because you're not going to love your life doing that. Ugh.
And you can also, which I don't even know what goes into this process, but you can purchase certificates of mailing where customers may purchase a certificate of mailing or registered or certified mail to obtain a receipt that serves as evidence of date or time it was presented as mailing. Also, when a customer pays for postage at a counter, they can get a PVI label, a postage value imprint. Like,
what?
All that is you are going in and talking to someone at the counter. This doesn't just matter for IRS documents, but if you're thinking legal documents, if you're in a lawsuit, you need to provide things by a certain date. This postmark thing is going to matter. There are going to be court cases in the future where it's like, well, I had it in the mail. Doesn't matter. What does the postmark date say?
And like just revenue recognition, and we do this for we get that a lot of this with donors, right? Because am I stealing your thunder with your face here?
Oh, there's a question coming up about this, but hit it.
Oh, and it has to have the postmark of last year, or we can't count it, and it's not going to be on your tax filing, so you can't include it in this year's taxes. And I feel like with all the options there, you now are going to have to be with your letter and a copy of today's newspaper with a world clock behind you, trying just to prove hey, I have it in the mail. It's January 31st. Oy.
You're almost painting a picture of a hostage scenario, right? Where you're sending the same photo you would send for proof of life.
Yeah, that's right. Proof of sending. Oh man, wow.
So, Jeremy, this is airing on the 29th. This is really the last episode that we can get in any sort of banter about it being year-end. Because after this, it's Valentine's Day. Everyone's in the mood. Yeah, I know, right? So we'll have to figure out what we do for our Valentine's episode. But all that being said, I want to make sure you have your double checks in place, that you took care of everything for the end of the year. So we're going to play a game called It's the End of the Year as We Know It. And I feel fine.
And I feel fine. Oh, let's hit that, Ian. Love it.
Yes. So, Jeremy, some questions just to make sure you covered all your bases. There is no other general theme, but let's see how you do. You ready?
All right, let's do it.
Okay, first question. Jeremy just finished prepping the books for the year, and now it's time for closing entries, clearing out net income and distributions by owner, contributions. What month and day should those entries be dated?
Oh, see, I've had some conversations around this with varying opinions, but I'm going January 1st.
So I'm going to give you the point here.
Yeah.
There are debates, and honestly,
yes.
You can get the job done either way. 12/31 or 1/1, right? if you're a tax preparer, as long as you know what you're doing, you can make it work. I agree. General consensus, and I agree because the way I was taught working in corporate publicly traded companies with audited financials, 1-1 was the answer. You do all the information based on January 31st. We would even include in the description and date it December 31st, but we would post it as of January 1st so that all those year-end balances look accurate, and then you start fresh as of the first thing on the first. I was hoping you would disagree and argue with me. Who did you talk to that disagreed?
I've had other people say that. Well, like, hey, the biggest one is like allocating draws and contributions, right? And pulling those out. And like, hey, that happened in 2025. You should make the entry there. But then you run the statement, which always runs at the end of the month, and it looks like there's nothing there. And we have that problem with nonprofits because they have restricted assets and unrestricted assets, and we have to make those entries. And it's like, I need to know. Yeah, no, it's the first.
Yeah.
I'm gonna die.
No, I'm right there with you. Yeah. January 1st, all day, every day, because then you run that balance sheet by year, and you can see quickly over the last 10 years what they contributed, what they distributed, what the net income was. You don't just see zeros for the last 10 years.
Yeah, which gives you no insight, and I see that in the books, and I'm like, what is this? I guess you can't call it wrong, but it doesn't give you the information you need. Boo.
Yeah, I'm not saying it's wrong, but it ain't right.
It ain't right.
All right, Jeremy. Question 2. Throughout the last 6 months, Jeremy has purchased 50,000 in 3D printers for his new 3D printing side hustle that you've already earned money on. In order to start taking depreciation in 2025, what does he need to document having done to those fixed assets?
Sounds dirty.
I know. What did you do to those assets?
What did you do to those assets? Go sit in the corner. Like produce something, or like put them in production, or like in use, and actually produce something with them, I would guess.
I'm looking for the words placed in service.
In service.
You said placed in use, placed in service. So this is a big one because, if you have a business that's doing any sort of construction, and maybe you do a lot of hotel clients that are adding a new cabin, right? It's like, has that asset been placed in service yet? And too often we see people miss the mark of like, we spent, $200,000 on this new unit. We're going to start selling it in March, but let's start depreciating it because the building was done. We just are waiting on HVAC. You can't, if you get audited, you can't claim that as a depreciable expense until it's in service producing revenue. And I think a lot of other bookkeepers, Jeremy, have you inherited books where they just throw stuff to construction in progress or assets in progress, and it just sits there and grows forever and never gets depreciated?
Yeah. Yeah, and I don't mind using that as long as especially if you have a longer project that's going to have a lot of invoices and you're building it up, right? But then move it to whatever it's supposed to be in and pick a date when it's put in service.
Yeah. So for all those dare I say newer bookkeepers out there, make sure you're going through that asset list and deciding what should be in service, what was used last year in the operations of the business.
I think for proof and service in the hotel industry, if you have a new room or villa or whatever, do you need to walk through it with a black light and make sure it's not perfectly clean?
I was just going to go to the same answer from our previous discussion, which is a newspaper and a hostage picture of you in the room.
Yeah, but I feel if you walk through that hotel light with the black light and you don't see anything, it's not really in service yet. All right,
ladies and gentlemen, please don't go stay at one of Jeremy's hotels.
Oh, God.
2 for 2, Jeremy, and this is the obligatory one I had to throw in there. Yeah. But if Jeremy paid a consultant for his Beanie Baby manufacturing business, he paid that consultant $1,000 to come in, and then paid them $2,000 in reimbursed travel expenses. How much should Jeremy 1099 that person for?
Oh, I don't have anything where we cover travel. I'm gonna go with the $3,000. I feel like that's all in part of the deal. Yeah.
Yep. So, and this is one that, you and I are in plenty of forums, Facebook groups, whatever else. And the amount of people I'm saying that like double isn't working right because it's including all this stuff and it's not breaking it out. And, there's so many of us in there having to educate them. Like, no, the IRS says parts and material included. You document what you paid them full out. And then them on their tax return would say, yeah, I had $3,000 come in, $1,000 in services, $2,000 in billable expenses, and then they deduct $2,000 in expenses. their net income is 1,000. But we see so many people, particularly in the double user community, that are freaking out that double is broken on its 1099 feature because it's including all these reimbursed expenses.
Yeah, and I was honestly surprised at the travel thing. Makes sense, and that's like inherently what we do anyway, right? But the parts and materials, and I saw like you called somebody out, and I was like, I didn't even know that, right? Like if they are actually selling goods or have materials involved with whatever service they're providing, yeah, that you would include that. So I think a good one would be like an IT supplier, and he's giving parts or putting in a server or whatever like that, right? You would have that all included. I'm guessing there's not a lot of people that know that.
Yeah, there was a lot of people that were very angry at QuickBooks and Double and Zero not working right. So, yeah, make sure you got this 1099 rights. Not too late to go justify it. But if you're adjusting it today on the 29th, make sure that Postmark, you go in and get that manual stamp.
Yeah, get your terrorist picture. Also, if you don't remember, like I always forget to do my own because it's like, you know what I'm saying? Like I've gotten years where it's like the 30th of January and I hear like back when I was doing them, I'm rushing to do them, or I hear everybody else being like, oh, does anyone need help to get these last ones out? And I'm like, oh crap, I had 2 contractors, I never did them yet, I gotta do it quick. That part don't forget, because I've been there.
Do you know why unaccountables were done so early?
No, why?
Because Ian, our editor, reached out and said, am I supposed to be getting one? It's like, oh yeah, I wasn't even going to think about doing unaccountables. Thank you, Ian, for making sure we did it on time.
Yeah, good call. Get a good producer. I love it.
It's almost like he listens to our podcast when he edits.
Yeah, he knows us. Be like, I better check these guys do the right thing. Love it.
All right. Jeremy has been sending invoices to UnAccountable in 2025 for his services rendered. And UnAccountable finally cut him a check on Christmas. It mails the next day, and it got delivered to Jeremy on January 5th. What year on his cash basis tax returns does Jeremy recognize that revenue? Oh, and it's postmarked day after Christmas, let's say. And you receive it in the mail on January 5th.
But in my cash basis, I can't recognize that until the January 5th, so it's going to be the next year.
Well done, sir. When would you have done it on accrual basis?
You should do it whenever you did the work, right? Not even when you put the check out. Like, when did you do the work? Yeah.
Perfect answer for you. But this is interesting because, Jeremy, it was postmarked on December 26th, 27th.
Yeah.
And you nonprofits give people a tax deduction. So why aren't you recognizing it? What's the rules here? Hit me with some knowledge, because I had to do some research to understand this.
Yeah, I mean, I don't make the rules here, but that's where we get the a lot, like so a lot of people do their charitable giving at the end of the year, right? And like myself, a lot of people are procrastinators, right? And get it done right after Christmas. Oh, hey, I need to get this out there. But the rule is, if an organization is going to include it as a donation as revenue in the year, and that you can use it as a tax-deductible charitable giving, not the check date, not anything else, the envelope when you send it has to be postmarked, or whatever we're calling that now. Yep. Whatever that date is, that is what determines it. So that we have clients where like we'll receive them, and in January or whatever, I'm like, hey, we're going to post it last year, and be like, save the envelope that went in and put it in there in case your auditor, like, and little ones, nobody's going to care. But if they get a big one in, you're like, save that envelope, throw it somewhere. So if the auditor questions this, you can bring it up and be like, here's the postmark date. That's why it's 2025, not 26.
So first of all, I love this answer because I was looking at this. I don't do nonprofits much. And I'll be honest, like you, if the postmark date, I backdate the check into last year so it shows on the financials. Apparently, technically, the donor can claim it as a deduction last year, but on your books as the nonprofit, you're still supposed to recognize it cash basis as a donation in 2026.
If you're cash basis.
Yes.
Yes. Yes.
Cash basis, $990 taxes. Yeah.
Oh, yeah. Totally agree. I mean, we would, yeah. No, agreed with that 100%. But it's just crazy. And now if they're changing all these mailing laws, oh Lord.
Well, and this just brings up the importance of having a donor management system that tracks when they gave it versus the books that say, so the donor management system says they gave in 2025, but then the books say they gave it in 2026.
Yeah. Yes.
Yeah, brutal.
And again, most of these get audited, so we have to do at least a high level reconciliation between the donor management system, just like you would a POS system, and your books to make sure that they align. Makes things fun.
Yeah. So, and then back to for-profit, unaccountable. That's a generous term for what we do here.
Yeah, oxymoron.
Right.
Yeah.
It's constructive receipt is the term they use. So if you received the check on January 5th, you constructively received it on January 5th. So yeah, that's when you'd recognize it. Good work. All right, 2 more for you, and then I think we got halftime, but let's do this. Okay, Jeremy, on the expense side, if I ordered a Zamboni for my new business, I know I'm not going to tell you what I'm doing, but it's not an ice skating rink, but I do need a Zamboni.
Okay, perfect.
I ordered it on December 1st, Jeremy. Cruel Base Books. I received it on Christmas, and I put it in service on 12/31 and pay for it on January 5th. What year do I start depreciating it?
You received it on Christmas? Did Santa bring it? Santa's delivery the Zamboni? Oh Lord, I was thinking of that joke and I forgot about the dates. Let's go.
Received on Christmas, put in service on New Year's Eve, paid for it on January 5th.
Put it in service date, right?
Man, you're crushing all of these.
Yeah.
Yes. So back when I worked for Vail Resorts and we were doing like big capital projects, they would do the capital project saying like, we need to have those assets in service, in use, constructively received on site, ready to go. If you can't have that purchase here on site by the 31st, you can't order it. And so that was always the thing is like, can you have it on site? Because it meant big deals for depreciation games for the organization when we're doing $6 million in upgrades a year. And so it's funny because some people would have a $300,000 project and like, we can't get the materials. They'd be like, great, you lost your money. We got 300 grand up for grabs. Anyone, can you make your project happen by New Year's Eve? And like, yeah.
Oof.
So for bigger organizations, that's a good reminder to go check those books. Make sure the in-service dates are right. You might be able to push some stuff backwards.
Yeah, and that's another. I hate the games though. That's why I got out of it. Like the year-end games of like, hey, I used to be in procurement, and hey, we're not going to pay our vendors for now because we want to hold cash for the end of the year and have things. Oh, hate it.
All right, last question for you, Jeremy. For year end, Jeremy bought a brand new tuk-tuk little car to drive around between all his clients he meets with. If he wants to claim actual vehicle expenses this year, what number should he have recorded on January 1st?
Mileage, right?
Give me a better answer than mileage.
Actual mileage.
You're taking actual expenses, not mileage. What should you record?
I don't know what you're looking for here, man. I'm sorry.
I'm gonna give you a middle of the. I'm gonna keep you from the perfect game.
All right, perfect.
I wanted your odometer reading, Jeremy.
Yeah, like how much miles? All right, that's what I meant with mileage. I was like, wait, what are you talking about? All right, go with it. Fine.
I wanted your odometer reading, and everyone you're listening to this, you already missed 1 month. But guess what? It's better to have that odometer reading as of January 31st than not at all. Because, Jeremy, do you need that odometer reading to take mileage expense?
No, you just have to track the miles and make sure you're have a log and noting business versus personal.
But if you want to take actual expenses, why would you need the odometer? Like, teach us here.
Oh, I don't do this, and we don't do this for clients either. So you're gonna have to
I'll take it from you then.
Yeah, finish my teaching. Yeah.
For actual expenses, you have to track your mileage. Say I had 5,000 miles this year. But then I also have to track how many miles the vehicle went overall. So if it went from 5K on the odometer to 15, that means I traveled 10K this year. I can only take half of the actual expenses. The IRS needs that proof. You need the odometer reading. So remind your clients, do it for your own business. Get that number now rather than saying, oh, well, we missed January 1st. Get it now. It's better late than never.
But as a tax professional, and say you have a medium amount of travel, right? Would you suggest doing the actual versus the mileage reimbursement?
I mean, shameless plug. We have a whole breakdown of like 6 or 7 scenarios in Firm Foundation where we walk through like, if it's a high gas mileage vehicle, take mileage. If it's a high value vehicle over 6,000 pounds and it's a gas guzzler, you should take actuals and then how much you're going to use at business. So like we have kind of a whole walkthrough in there. It really depends. I do mileage just because it's hard to justify. And you have to use the vehicle for over 50% business to even take actuals.
Oh, yeah.
I'm not using either of my vehicles for over 50% actual.
Yeah, that makes sense. Do you have electric cars built into that?
We have one plug-in hybrid, so like we get our first 35
Ooh.
miles free every day. And I mean, to drive
Okay.
kids to school and back, you pretty much don't use the gas engine.
Right, that's what I'm saying. Is that in your that should be in your firm foundation model? Like, what if you have an electric and use high?
Oh, we do. It's in
Nice.
there. It's
Okay.
in there.
Let's be honest, most of us didn't become bookkeepers or accountants to spend hours learning marketing systems and chasing leads. Heck, some of us became accountants because we didn't want to talk to people. We did it also to serve clients and build businesses we love. But what if you could get better clients without the marketing overwhelm? Well, that's exactly what Keepful does. It's an all-in-one marketing system built specifically for bookkeepers and accountants. And it works 24/7 behind the scenes to bring in leads, book consultations, and automate follow-ups. You get a professional website, branded consultation page, and follow-up automations all tailored to your business. No more duct taping tools together or hiring expensive marketing teams. If you want to grow your firm with ease and attract better clients without doing more work, go check out Keepful today at keepful.com or follow the link in the show notes to give us a little bit of extra credit with the folks over at Keepful.
I was just going to say, and with that sound, it's halftime already.
Yeah. Let's do it.
Are you ready? Jeremy, I want to talk about a new app today. And this one is free 99 under the radar. But have you ever tried to document a process for your team, build out a workflow diagram, do a map of ownership of an entity, any of that stuff using something like Microsoft has their own, there's Miro, there's Fathom, like there's all these different diagramming apps. Have you ever tried those?
I have not tried many of these, but I've kind of tried to bastardize Excel to do it, right? Because you can have shapes in there and do that.
Same with PowerPoint. I see people do a lot of just like, I'll do it in PowerPoint.
Right.
Well, I want to bring up one that honestly, one of my employees reminded me of, draw.io. And I actually don't know if that's even the domain I should tell y'all, because then it redirects to like app.diagrams.net. But then if you go look for their homepage, it's drawio.com. So I don't know. I always just type in draw.io. But it is like Miro or any other of those diagram programs, but there's no paywall. It's straight up for free. You do not need to sign up for an account. You just save the files on your computer and then reopen them in the web browser. And if you're getting started and you need to map out processes, build diagrams, make flowcharts for clients, like this is the easiest win. And dare I say, even for someone who has a moderately successful firm, I'm not going to use the full word successful, I still recommend my staff use it rather than paying for a bunch of Miro licenses.
Yeah, I did not know this existed. And I saw you had this out there when you mentioned it to me. And I was like, oh, let me check this out. And it's actually like user friendly, right? Yeah. Like I am not by any means like, that's why I struggle with this. It's like, no, I want the arrow to go here and I want it to be there. And I want this bend to go this way. And I was like, can I do that? And I was like, yeah. And it's almost set up like Microsoft Office, right? Like it has the undo and kind of that general feel to it. But yeah, it seems nice. I'm going to use this.
And it doesn't, so many of the softwares, it's like, oh, we have restricted shapes you can use, or like you're trying to maybe you're trying to build out a diagram of an office space or something. And it's like, well, you want to use more than circles and squares? Pay $6.99 a month. And they're just, I think someone over at draw.io forgot to try and make money on the internet. It just works and it's free. I've never given them an email address. What are they getting from me out of this relationship? I don't know, but I will exploit it.
Yeah, I agree with you though. How is somebody who put this out there and how are they benefiting from it? That is a good question.
So all that to say, user, we have nothing to sell you, but give it a shot. Use it. Like free, easy, no account needed, no cloud storage. You just save it to your local drive and run with it. So if anything, you're welcome.
Yeah.
Ian, can I get the song from Moana? What can I say except you're welcome? Right there. That would be great.
Yeah. Good call.
Jeremy, not gonna lie, man. I got a little bored this week.
Uh-oh.
And I did something.
You are having a good January, man.
It got to 3 p.m. in the day, and instead of doom scrolling on my phone, I was scrolling through my text messages. I was trying to find an old link from a friend, and I realized I have someone's phone number on my phone that I don't know if she realized I had. I have Dawn Brolin's digits on my phone.
Oh.
And the best part is she doesn't know it's my number. So, decided to do a little new segment I'm going to try out here. Maybe this is one time lived if she blocks me forever. But today, Jeremy, I want to present to you the first instance of Trollin Brolin.
Hello, Dawn Brolin, Powerful Accounting. How can I help you?
Hi, Don. Yeah, you were highly recommended to me as a tax expert. I have a few tax questions. Are you guys taking new clients?
Yeah, we do service a certain type of demographic, but we do have what we call an ideal client profile. But let's hear more about what you're doing.
Okay, yeah. So my fiance and I, we have another business, but essentially she's a pretty famous TikToker, and we've been making some like okay money. I've been helping her out with that, but like weird story, but like this last year, this guy online asked us to send her just a mason jar full of air, like air that was just in the room with her. We thought it was like super creepy. I know, but you know, for $20, we said sure, and he did. So they're like, well, can we just post this on her Instagram and TikTok? Would people buy it? And we've been selling them now at like $40 a jar. Like I think we're on track to make like 180,000 this year, and I don't know what I'm doing taxes, but like a friend of mine said we could like write off all our personal expenses, like her perfume and her clothes, and like I was just hoping someone could help us out with that.
Yeah, that's a loaded question, kind of. And I always have to say it depends. Like, I don't know all the ins and outs. And so this is your fiance, your girlfriend?
My fiance.
Oh, your fiance. Okay, okay, good. Well, that's nice of you to help her out and try to, seek out some help with accounting. I'm not so sure your friend's qualified. I do hear that a lot, FYI. I do hear a lot of friends and family and holidays, and they go and they learn all kinds of really cool tax tips. They go to TikTok, well, where, your fiance's living.
Yeah.
Which isn't really the best advice, to be honest. I mean, okay, so we know we need to record the sales. I mean, if you're selling air, which, I wish I thought of that. We got to record all the income. And then as far as expenses go, well, it really should be related to the selling of the air. Like it sounds to me when you're talking about like makeup and stuff like that, that's more towards the TikTok side of it. If she's a professional TikToker for real.
Mm-hmm.
That's another question. I mean, there's a lot of factors that go into it. It's not a blanket yes or no kind of question. So, there's a lot more research we have to dig into in order to get you where I think you want to get to. But what other questions are you thinking?
Well, like so first of all, like, am I gonna be able to make some tax savings off of this?
Well, you're not married, so what? I mean,
But
even,
we're engaged.
Yeah, no, it doesn't work like that. I know everybody, your buddy probably said, well, I've done it before, which is probably not true, by the way.
Yeah, I mean, that same guy does meth. I'm not going to do everything he does.
And that's why, thank you for calling a professional as opposed to your friend on getting tax advice. But no, you're not going to reap any benefits from her business or deductions or any of that kind of stuff. It's not happening.
My friend said we also need to track inventory. Does that include like our air? Do we have to track that?
That's not. Yeah. I don't really think you inventory air. I mean, if you can't, like, I probably could reach out to some colleagues who know about selling air or things that aren't real, like really sellable. That'd be tough to put a value on air. I mean, I know we all need it, right? Otherwise, I'll be dead. But, yeah, so again, very good question. What we like to do in the beginning is we like to, acquire more information. But from what you're asking me, you're not getting any benefit. And as far as what her write-offs are I probably need to talk to her a little bit more about that stuff. But, I really appreciate you calling anyway. I guess you got to think about it and then get back to me.
But one more question, like if I were to suggest some like aesthetic changes to her body, could we deduct that?
Wait a minute, is this freaking Tyler?
I got
Tyler.
Who's
are
that?
You serious? What are you doing? You're bothering me now. Now you know what? I love you, but you're irritating. Now you've just irritated me.
I miss you, Don.
Bye.
Oh, that was awesome. You're gonna have to do that again.
I think I found my new hobby. Some people pick up woodworking. I got this.
Yeah, don't get us blacklisted in the community, all right? But like, well done. But she's awesome too. Oh, awesome. All the way around.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
All right, it's my turn. Do you remember, like, I didn't say it after that, but I pretty much went 100% on your game.
You did. I mean, odometer, I'm going to take off. It's like you got a 9.9. I'm not going to give you the perfect 10, but you're right there.
That was pretty good. All right, well, it's your turn. Go under the scrutiny, this time doing fast figures. Are you ready, sir?
Do I get a theme this week, or am I just thrown to the wolves?
You do, and I'll start with a theme.
Ooh, okay. Let's throw it on the clock. Here we go.
So the day this drops, January 29th, is National Puzzle Day. Within 100,000 pieces, how many pieces is the largest puzzle ever created according to Guinness World Records?
I'm going to go 500,000.
Puzzle, the newish GL tool, is attempting to win market share from QBO and others and advertising that it saves this amount of hours from your monthly close process within 25%.
20.
Jigsaw is the famous villain from the Saw series of movies. How many films in this series have been released to date?
7?
Auditors are assessing the puzzle that is accurate financial statements for engaged clients. What % of revenue is typically used as the amount that would be considered material?
Ooh, 10%.
In a standard Sudoku puzzle, how many squares are there?
Oh, it's a 9x9, 81.
Reconciliations can be thought of as their own puzzle that us accountants work through monthly. What % of an organization's bank accounts should be reconciled every month?
100.
A partnership has 2 equal owners and nets $100,000 in 2025. How much of this should be allocated to each owner when you close the books?
50%.
Within 10 years, when was the first New York Times crossword puzzle published?
21. 1921.
I was like, is it 1921?
Yeah, sorry.
All right, I like it. January 29th, also everybody's favorite talk show host, Oprah's birthday.
Oh.
How many cars did she give away in her famous 2004 episode? Within 50.
Oh, 175. No, 200. 200. It feels like it'd be a round number. So I want that 150 to 250 window. 200.
All right, 200. Final one. How many times can you subtract 10 from 100?
I feel like infinite because I could go negative. So yeah, I'm just going to go infinite.
All right. All right, nice work. Let's talk about some puzzles and puzzle some puzzlers. Step back to number 1, National Puzzle Day here on the 29th. Within 100,000 pieces, how many pieces was the largest puzzle ever? You said 500. Oh,
500K.
You said 500K. And almost on the button, 551,232 pieces.
Wow.
So this was made by the students at the University of Economics in Ho Chi Minh City, Vietnam, in September of 2011, and measured almost 50 feet by 76 feet. Here's my question. In economics, that's the study of scarcity of resources in certain environments, right? Was there not a cost-benefit analysis to this? Of like, we're gonna spend. Was it during class? Was it not during class? I feel like there was. Yeah, I don't know. What do you think?
My first question when you said they were all economics students, I'm like, did someone get their dissertation approved to like? Was this someone's final project or like we made a puzzle?
Yeah.
I
don't know.
Maybe I don't understand economics. Okay.
Yeah.
Proceed.
And just some side notes. Want to take a guess? The largest number of pieces of a puzzle that you can actually go purchase.
250. Okay.
60,000.
Okay.
Ish, right? And I think it's at Costco or whatever.
You sure you know where you're going?
Yeah, I know this place is pretty good. I went to law school here.
In Costco?
Yeah, I couldn't believe it myself.
Well, nice start. Going to number 2, talking about Puzzle, the new GL tool out there trying to steal market share. Actively markets, they can save this number of hours within 25%. You said 20. Exactly right. 20 hours.
Wow.
Nice.
I feel like I've been on their website a bit.
Yeah, I feel like, that doesn't surprise me at all. You got that one right. Looked at the at least most recent stats I could find on market share. So QBO's got a 75% market share for SMBs, right? And maybe about a 40% even if you include the larger businesses. We've talked about this a little bit. So Puzzle's trying to make inroads. What do you think now going into New Year? What do these we have this one? What is the other one that was at?
Campfire was also at scaling new heights, and then Kick is making moves plus digits. Someone's got to emerge, man. Have you watched Intuit's stock the last 2 days? Again, guys, this is the 21st, but it's plummeted. Someone's gonna figure it out, but I don't think us accountants are gonna get replaced. We're gonna have to learn new tools because clients aren't gonna figure this stuff out.
If I was starting my organization now and the niche would facilitate it, I would absolutely pick another tool than QBO, right? And I know we've all heard and even Stats said this on Jason Stats said this on one of the most recent ones, and he's like, man, the call out there for Double to get their get a GL system out there just keeps growing. And wouldn't that be nice?
So I've been itching for that, and people that are in the Double communities, they're like, Double, you should do this. I'm like, please, everyone, I'm willing to bet it's on their radar, but don't let Intuit even think that they're coming for them until Double's ready to announce it, because we don't want Intuit to have a target on Double's back, right? We want them to fly under the radar until they're ready to say, we are ready to spread our wings and fly today.
It's a good thing nobody listens to this.
Well, Nancy and Char know, so
yeah,
quiet ladies.
Right. Thanks, Mom. All right, number 3. Jigsaw, the famous villain of the Saw series. Are you a fan of the Saws?
I actually liked the first one with Cary Elwes, and then after that, it's okay, these just got ridiculous. I think I watched 2, maybe 3. I don't enjoy those types of work, but number 1 was actually a good movie.
Yeah, we are exactly aligned with that, because number 1 is so psychological, and then you get to the end, and I won't ruin it for anyone. You're like, oh, I didn't see that one coming. It's like the, what's the Bruce Willis one with
Sixth Sense?
Yeah, Sixth Sense, where it's oh yeah, wow.
Or Sharknado. Just kidding.
Sharknado's got a surprise ending. It was really
didn't see that coming.
Right? I love it. All right. How many movies? You said 7. It is actually 10. So Saw 10 came out in 2023.
Do you ever have a question in Fast Figures where you're like, I'm very okay, I got that wrong?
Yes. There's a lot of them. Yep, that's cool. Okay. Auditors that are assessing puzzles of financial statements, doing audits, what % of revenue is typically used that would be considered material? You said 10. I'm going to say that's wrong. That's
5.
pretty high. It's usually 1 to 2% that I've heard
really?
of ours. Yes.
Huh.
But you got to think if you're dealing with $1 million organization, that's $10,000 to $20,000.
As someone that recently went back to school and, got all the credits I need to sit for the CPA, I can tell you the textbook says there is no here's the exact percentage. It is, would the adjustments materially affect decision making of someone reviewing the financials? So then it's well, what is that number? I don't know.
Yeah.
You're right, but 10 was high.
Yeah, super material. So super subjective. Right. And we're getting a lot of these scheduled right now. Again, nonprofits, you got to do it. But if you are subjected to this, make friends with your auditors. That is probably our number 1 referral source that we have.
Send them gifts.
Yep. Do that.
We love our partnership with you.
Yeah. And also it makes your audit so much easier if you are cordially, I don't have to be friends with them, but have a relationship, because you ask good questions and you can ask their opinion on things, and super hard accounting theory things, you can reach out to them instead of trying to research it to yourself or ask their opinion on things. So building those relationships, like any other partner, vendor, super important.
Yeah, they won't come after a bill that's on the books and say, well, you put this all to materials and supplies, but $2.50 of it was put to bank fees, but it's actually a late fee that needs to show up. You're leave me alone. Leave me alone.
Next one, standard Sudoku puzzle. How many squares are there? You said 81. Correct. 81, 9 boxes of 9.
Yep. I love Sudoku.
You?
And the LinkedIn games. Do you play the LinkedIn games? Queens, Zip?
I haven't tried them yet. Well, App Snack next week. Next time.
Okay.
LinkedIn games.
Done. Done.
There's some
I love it.
foreshadowing. I love this, but I would love to hear about them. I saw when they came out, and I do the New York Times ones. Like
oh, dude, I'm like on a 180-day streak on Zip and Queens. Like those two are my jam.
All right.
You know Rachel LaMancha from dude, that girl is good. Like my goal on Queens is to beat her, and I rarely do. But no one can beat me on Zip. Oh man, I'm good.
Oh, gauntlet's been thrown down. I'm gonna zip it up.
Dude, bring it on. Bring it on. But dude, she is good on Queens. It kills me.
Ian, do not take that out of context when I say I'm gonna zip it up. Like that was not cool.
Run with it, Ian.
I'm gonna
zip it up. Zip it
up. Yeah, I feel like that's a good app snack. Let's do that. We're always kind of looking for that anyway. So cool. All right. Number 6, reconciliations, kind of their own puzzle. What percent of bank accounts should be reconciled? You said 100? Yes, 100%. Now, again, you got to throw these easy questions in there because sometimes you overthink it as an accountant and be like, wait, really? Okay. Are there accounts that you do outside of the bank accounts, though, and reconcile them between banks, credit cards, investment accounts, things like that? Do you reconcile? What other accounts do you typically reconcile?
So in the firm foundation, we talk about 7 or 8 of them. I can't even remember. But there's inventory accounts. So things that have a source of truth, but it's not from a bank account. It's someone needs to provide you that number and you need to true up the inventory accounts. We have manual clearing accounts where I've got some clients with like 6 different payment methods. We don't do everything directly to the bank. We do clearing accounts. You have prepaids, you have deferred revenue. In hotels, we have what's called the guest ledger and the advanced deposit ledger, and we need to reconcile those.
Okay.
And then you've got loans. So you have like private loans. We're building the amortization schedules. And then we'll just have random ones where it's like, an employee, the company paid for their ski pass because it's a hotel that's right there on a resort. And so they pay for every employee's ski pass. And eventually they'll deduct it from the employee's paycheck, but it just sits there. And those are those manual reconciliations where it's like, well, we need to provide you a statement that says, here's the $8,000 sitting in there. And, you deducted $100 from Jeremy's paycheck. So now Jeremy's balance has come down. But it's like those manual clearings where we don't really put it to AR. We just kind of, have manual reconciliations. So, yeah, we reconcile all those.
Okay. I like it. And there are some people in the camp that you need to reconcile every balance sheet account.
Depending on how much the client pays us, I am in that camp.
Okay.
But we don't always do it throughout the year. If like fixed assets are a junk show and they come to us and they can't explain it, it's like, we'll figure that out at year end. But if we can, we do every balance sheet.
Oh yeah. That seems like a lot to me, but it depends on the size of the organization, how much is in there, right? The part that I say at our team is like, especially those high volume transaction things like around payroll liabilities, like look at those at least quarterly, make sure that you know what's coming in, what's coming out, all of that stuff. But
sales tax, always reconcile.
Yeah, nonprofits, not sales tax. Yep, no, I like it. Good take. Okay, another kind of gimme. Partnership makes $100K. How much? And equal partners, how much does each of them get? Said $50K, correct? $50K. So talking about this in partnership. So we're at the point now we're closing books for partners, or potentially a gentleman and that is setting up a new entity. So when is partnership the right call? Coming from like a tax hat part, like versus an S corp versus just rolling as a LLC single member.
Okay, so let's talk about this because in my opinion, partnership should almost never be S corps.
Okay,
ever, because if we ever like UnAccountable, Jeremy, let's say one day we produce profit. And we're actually making money off this thing and not, scrambling to break even. Ian, I'm so sorry your payment bounced again this month. We will get you paid.
We're good for it, we promise.
Yeah, we need to be better about reaching out to sponsors. Tom, we're calling you.
Yeah.
So all that being said, for UnAccountable, let's say we're making our money. Well, let's say one day, Jeremy, you're like, hey, Tyler, I'm going to take over running live game shows, go around the country promoting this thing, and you get a different paycheck. Well, because we're both owners, we would need to take certain levels of reasonable comp and then like what's allowed versus just saying, hey, here's my ownership, here's your ownership. You could take your payment out. But instead, we just take our profits to our own S corps that we both own individually. And then, I have part in this partnership company with another,
software, I've got my accounting firm, I got UnAccountable, I got Firm Foundation. All my profits from all of those flow through to one S Corp where I take a single salary rather than several S Corps where I need to take a salary from all of them and make sure they're all justified. No, I want all the profit from all of those going to one spot. And it's the same thing for you. If, you know, I don't know what other, your tuk-tuk business and 3D printer business we discussed earlier.
Yes.
Unless there's a good reason, never.
Yeah. And you typically have this where the parent S Corp is, or the children S Corp, child S Corps are members of the parent S Corp.
So S Corps can't own S Corps.
Yeah. Okay.
But my S Corp that I'm 100% owner of, like, it actually owns and reports my interest in UnAccountable. It owns and reports my interest in this other firm that's just a 1065 partnership.
Yeah.
And so, yeah, I would say most of the time you just want one S Corp you own and you want to own it 100%. And then all your partnerships feed into that.
Got it. Cool. Good call. Like it. All right. Moving on. Within 10 years, when was the first New York Times crossword puzzle published?
No idea.
Ooh, you got it. Within 10 years, 1921, what? You said it was 1913.
Really? I hit the wrong answer just assuming I was way off.
So swummy, slippy, slappy, slimming, Simmons, Swanson?
Maybe it's on the briefcase. Look on the...
Oh, yeah. It's right here. Samsonite. I was way off.
Yeah, pretty good, man. Okay, next one. So Oprah's famous 2004 episode where she gave away cars. Do you remember what kind of cars they were?
No idea.
It's when the Pontiac came out with the G5, I think. They were getting rid of the Grand Am and trying to promote their G5. So she gave away all those. How many did she give away? Within 50. You said 200. Not giving you this one. 276 cars were given away that day. And the controversy, do you remember this came out of this? Because of the tax burden with the gift. So the cars themselves were worth about 28 or 29,000. So depending on where you were, you got a tax burden with this gift of $6,000 to $7,000 per person. And so all sorts of people were pissy about this.
How are you pissy about a net gain? Because, like, I'm assuming if they couldn't facilitate, they could probably sell the car and still walk away with 17 grand in their pocket. Like, I'm sorry. Like, this is the clients where I pitch them tax savings. I'm like, look, I just figured out a way to save you 18,000. It's just going to require, you know, $1,000 more in tax services. And like, we can't afford that $1,000. I'm like, I'm going to give you 18,000 back. Like,
how does this make sense? Oh yeah, I agree. And the only thing I could see is, like, I don't know when that tax burden is required. Like, do you pay that right away? And some people may not have $6,000 to $7,000 to float. But I would think that would be part of your return, right? A gift tax that you'd have to put on your return at the end of the year.
Was it a sales tax? Like, if it was a sales tax issue, obviously it's due right away. If it's on closing on the vehicle and titling, and then you have to, like, then yeah, if it was a sales tax issue.
Yeah.
If it was gift tax and income, then yeah, it would be at year end. I don't know. That would be the answer.
This is again where we ask questions where we don't know the answers.
Yeah. Why do we get ourselves into these corners? Limited research budget, folks.
Right. And I think there was enough complaining that I believe she did this again when the Beatles came out, the VW Beatles, but then gave the audience, or they worked with Volkswagen to give the audience money to cover the taxes too, so that there wasn't.
But then you got to have money to cover the taxes on the taxes.
Correct. Yes. And that is, oh God, that's like a trial and error spreadsheet exercise that you just hate and be like, well, I got to change this. Oh, that changes that number too. Yeah. Okay. All right. And then last one, how many times can you subtract 10 from 100?
I can do it forever, man. Bring it on.
You said infinity.
I'm guessing you're looking for the answer of 10.
No, I'm going to give the answer. I'm going to say you're wrong first. Let's give you that. And then I'm going to say it's 1, because after you subtract it once, then you're subtracting
you get
from
90.
So throw in a little puzzle at the end of the puzzle theme.
Fair enough.
But you're not wrong, right? It depends how you take the question. So
either way, I like that you threw a tripwire in there.
Yeah, overall pretty good though. I think 7 out of 10, man. That's pretty good, especially me throwing the right question. All right, and then we're gonna talk winner of the week. We're gonna have another drop in here. Coming back from New Zealand, let's get a good Smeagol. Precious metals, if you are owner of that, you see like just skyrocketing. And I know you mentioned before that Intuit's stock has been tanking, but kind of last couple days, all stocks have been tanking since apparently we're taking over Greenland or what's going on. So any of those investments you have in precious metals, if you were in that, that's been gangbusters over the last year to 6 months. Good call.
That's why I'm still holding on to my Beanie Babies, man.
Yeah, absolutely.
One day, those are going to pay off.
All that expensive art.
And our loser, Jeremy.
Our loser of the week, CPA firms. So they're still not getting it. Just Forbes this week had an article that there was a new study going out that I loved how they put this, that they interviewed staff members and they bucketed them as the leavers, people who left the place, and the stayers, people who stayed at the firm. And regardless of which bucket were you in, take a guess on why people were leaving and their biggest gripe.
Hours?
Work-life balance. Yep.
Yep.
Leavers did not believe that even though there was talk about it, that any additional work would actually happen. And stayers felt that they didn't even, like when people were leaving, things were not addressed, that was not handled right. They weren't given the tools to like help work through that. And that also that this then leads to poor client retention or client acquisition in the future because all these people then go into the same communities and find other jobs that the CPA firms could work with. Not a good relationship, so it could be detrimental to them long term. So figure out that work-life balance, CPA firms. Come on.
Yeah, brutal. Well, Jeremy, this was already a long episode, but I loved it. It was fun. We'll have to figure out what we're doing for Valentine's coming up here, but we're at time, so make like a banana and split. See you next week, sir.
Later.
Please sponsor our podcast. We make no money.
Do you want to make $10,000 today? Do you want to lose 20 pounds in the next month? Do you want to be well-liked and respected by all your peers? We can't help you with that. You've come to the wrong place. But if you do want to earn an hour of CPE credit for listening to this episode, right after you finish, head on over to the Earmark app, take a short 5-question quiz, and you earn 1 hour of CPE just for listening to us. Happy quizzing!